So back in September 2017, I joined PwC as a fresh-faced graduate. And I remember my first week, it was an induction week. PwC had put us up in this country club hotel in the middle of Windsor. And it was a great opportunity to meet all my intake, people I'd be going through the Big Four experience with. They had us running around doing various challenges. And I vividly remember this one evening. We was all sat outside in this kind of bar area having a drink, and we were all talking about how excited we were to start our career at PwC and placing bets on who would make it all the way to the partnership. Now fast forward 4 years later, and over 70% of the people that attended that induction event have now actually left the firm. This may seem incredibly high for most graduate schemes, but for the Big Four, it's not unusual, and in fact, it's actually expected. A lot of people use the Big Four as a stepping stone for greater opportunities. You essentially gain your qualification and you go out to the market to see what other opportunities there are. So if you've recently joined the Big Four, soon to qualify, or maybe even recently qualified, this video is going to be for you, because we're going to go through several exit opportunities, looking at the roles, the salaries, the hours, and how easy it is to actually get these jobs. We're also going to be talking about when's the best time to leave the Big Four and sharing with you some of my insider hints and tips. So let's dive in. I have timestamped this video, so you should be able to see the chapters in the, I don't know what it's called, timeline, something like that. If you're not sure where you want to end up, probably best to listen to the video throughout just to see the various roles you can go into. But if you know you want to go into investment banking or corporate finance, feel free to skip ahead. Before we dive in, there are a couple caveats. The salary ranges I'll be providing you are based on London roles. If you're outside in the regions, they will be slightly lower, anywhere up to 20%, so do take that into account. Roles and salaries we'll go through are based on what individuals in my peer group and my intake actually achieved when they left the Big Four. So it's not going to be based on some averages sourced from the internet. It's going to be from real life experience. Check out the Google document, provides you with a summary of kind of the video today, outlining the roles you can go into, what you'll be doing, the salary ranges, and some recommended recruiters. There will be a link down in the description. There might also be a card that kind of flashes up around here, or is it here? One of the two. And there will be a bit of an audit focus, but if you're in kind of consulting or tax or corporate finance, doesn't mean switch off. It just means there'll be a slightly bit more audit related discussion when we go through the roles. One of the popular post Big Four exit opportunities is breaking into consulting, and there's a range of different fields you can go into for consulting. For example, you can be a strategy consultant, advising companies on high-level decisions, what markets they should be entering and where they should be directing their company in the long term. You can go into human resource consulting, marketing consulting, supply chain consulting. So there's a variety of different areas you can go into as a consultant, but fundamentally consultants solve problems. It's about identifying issues in a current process or a current situation that a business has, identifying potential solutions to those and helping implement those solutions. In terms of ease of breaking into consulting, it really depends on how you can spin that experience that you've had. If you've had some really strong kind of process improvement experience in audit or controls experience, you should be fairly okay. Being completely honest, from Big Four audits, I'm going to say it's unlikely that you'll break into, top tier consultancies, for example, like McKinsey or Bain & Co, Boston Consulting Group and stuff like that. It's not impossible, but it will be extremely hard. But there's a lot of boutique consultancies that still have great prestige that you'll be able to break into. In terms of hours, once again, it really depends. If you're joining one of the larger firms like McKinsey or Bain & Co, the hours will be pretty consistent, if not slightly worse than audit. But if you're joining one of a smaller, more boutique consultancy, the hours can actually reduce because there's a lot more kind of well-being and welfare initiatives in place. So the hours, I'm going to say, will remain fairly consistent with audit. Benefit, obviously, of moving into consulting is that you will get a pay rise. In terms of salary, you should expect to earn anywhere from £60,000 plus. There's a couple of peers in my intake that have left, and their salaries range between £60,000 up to £70,000, and that's a base salary. So it's before you include any performance-based bonus. So potentially a more interesting role, fairly consistent hours, and you're paid more. Now, I'm not sure if this really counts as an exit opportunity because you're not really exiting the Big Four, you're just transferring department. But If you're in a department like audit, for example, a lot of your peers will be trying to do internal transfers to other areas. Once you're qualified, each year, most of the big four firms do open what's called the internal transfer window. You can transfer internally to the deals advisory team, so for example, performing due diligence and mergers and acquisitions. You can transfer across to corporate finance, which is all about the best way to structure your company in terms of debt and equity and various other pieces like that. Or you can go into consulting, which is obviously about consulting businesses on how to improve maybe their operations, their strategy, or whatever specific advice they're seeking. So there's a range of different opportunities that you can go into. You will have to go through the standard interview and application process. It is a bit streamlined compared to external people, but there is still an application process to go through. In terms of ease, because the big four essentially set themselves up for this internal transfer window and they'd rather keep good talent rather than lose it externally, I'm going to say ease. I'm going to put it down on the easier side of exit opportunities. There's a process in place. They do encourage people to take these opportunities and to stay with the firm. So I'm going to say it's fairly easy to do, but you will need to achieve a high performance rating in your department. So for example, if you're getting low performance ratings in audit, you're never going to be transferred out. In terms of hours, it'd be fairly consistent. You're at the big four, so audit is known to have the worst hours consistently, but depending on the kind of projects you are on in consulting or corporate finance, they can be just as busy. So I'm going to say hours are going to be consistent. But if you were to join other departments like consulting or corporate finance deals, you're actually paid more as a base salary, so you're going to have an increased earnings each month, and you also get an enhanced performance-based bonus. And you'd be doing more interesting work, getting paid more, and your hours be fairly consistent. So one of the most desired exit opportunities is becoming an investment banker. And investment banks provide a variety of financial services to individuals, corporations and governments. They essentially act as financial advisors, advising their clients for stock and bond issues, mergers and acquisitions, and a variety of other things. And given the association with this kind of really successful, high-flying, kind of Wolf of Wall Street lifestyle, and because obviously it's one of the most desirable roles, the competition to secure the roles is extremely high. So it's one of the hardest exit opportunities to secure. So you really got to make sure your application and your experience is on point. It's going to be harder as well if you're from the audit or assurance line of service, because your day-to-day role isn't always as applicable. So you really need to be leveraging as much or getting involved with as much mergers and acquisition auditing or corporate restructuring auditing or initial public offerings, anything like that, as much as you can. If you're working in corporate finance or mergers and acquisitions at the big four already, it will be slightly easier than audit, but at the same time, it's still going to be pretty hard to get into this one. So because it's so hard, I will be doing a separate video on specific advice on how to break into investment banking, so watch out for that. In terms of hours, your hours in investment banking is probably going to be higher than what you've experienced at the big four. But because the hours are higher, you're paid a lot more. You're rewarded more for the time you put in. So one of the individuals in my intake actually secured a job in investment banking from audit. Base starting salary was £100,000 before you even considered the performance-based bonus. But yes, in summary, really exciting opportunity. It's probably one of the hardest to get into. The hours probably increase compared to Big Four, but you're paid a hell of a lot more. Another really popular and another really desirable route is corporate finance, and you can either do this through an internal transfer to the corporate finance department, or you can leave for a corporate finance specific firm. And I've always seen corporate finance as kind of investment banking light. That isn't entirely accurate, and I imagine I'm going to get some hate in the comments for saying that. Corporate finance basically deals with how companies address funding sources, capital structure. When I say capital structure, I mean kind of the mix of equity and debt and investment decisions. So for example, they'll be involved in due diligence and valuations and various other bits like that. In terms of ease of securing jobs, because it is quite a desirable role to go into, it is going to be harder than just moving into industry as an accountant. However, it's not going to be as hard as moving into consulting or investment banking or anything like that. So we're going to give it a medium rating. It's going to be hard, but it's not going to be too much of a struggle if you tailor your CV and do lots of kind of prep for it. In terms of hours, it really depends on what kind of firm you join. I would say there'd be slightly lower, only a slight reduction. If you're joining a more boutique firm, it will be quite significantly lower, but if you're joining one of the big corporate finance houses, it will remain fairly consistent. In terms of salary and what you get, I've seen the biggest range in corporate finance. Some have ranged from £58,000 all the way up to £75,000 plus performance-based bonuses. So it really depends on what role or specific role within corporate finance you go into, what firm you join, and I guess your negotiating ability. It's quite a big range that, but that's the range for my peers, and that's been about 4 or so people that have gone into those roles. The majority of people, particularly in the audit and assurance line of service, will go into accounting roles in industry. And this is typically joining a FTSE 100 or a FTSE 250 firm as part of their in-house accountancy team. The typical roles people go into are the group reporting accountant roles, financial analyst roles, technical accountants, kind of roles like that. And instead of auditing financial statements, obviously your role will be preparing financial statements or preparing part of financial statements. So there's a bit of a shift. Instead of kind of fact checking those documents, it will be you actually producing them, and you'll have the auditors probably pestering you with loads of emails and loads of requests and all that stuff. Also, you won't have clients anymore. You'll just be working as part of your company with the same team, indefinitely, well, until you decide to leave whenever. So in terms of hours, there is a reduction in hours. However, month ends and in particular year ends still remain busy. So for example, if you're joining a firm that requires an audit, typically at year end your hours will be pretty high, not as bad as auditors, but it'll still be pretty high. But overall throughout the year they'd be consistently low. I'd say typically be doing a 9 to 6. In terms of salary, once again you will get a boost. It won't be as high as some other opportunities, but you could expect around £58,000 upwards plus a performance based bonus. So the majority of people actually leave the Big Four 3 to 4 years after they join as a graduate. And to give you a bit of context and to set the scene a bit, the graduate scheme or the training contract is 3 years in total. And at 3 years you'll go through your exams and you'll have your time requirements to become a chartered accountant. So the majority of people, once they've hit that 3 years, will then decide to leave. You can leave before the 3 years, but I wouldn't recommend it because the firms can claw back some of the kind of tuition or exam costs, and there will be a number, if you went for interviews externally, there will be a number of red flags as to, or a question will be asked as to why you've left your training contract early. Typically your market value, if you leave before 3 years, it wouldn't have increased because you're effectively, well, you're not a chartered accountant, you're an untrained accountant with some Big Four experience. So you're not going to see a nice incremental increase. But if you're really obviously disliking the job, you don't like what you're doing, nothing's worth sacrificing in mental health. But after 3 years, you're kind of free to do whatever you want. You're like a free transfer. You will have like a month or 2 or 3 months notice or something like that, but there won't be any kind of cost clawback. There's always a question around, should you stay, try and push to manager and then leave? So typically at the Big Four it takes you 5 years to reach that manager stage. You can kind of push for early promotion, but on average it's around 5 years, and you qualify after 3 years. So it means sticking around for an additional 2 years. When you leave as a manager, you will get an incremental kind of salary boost compared to leaving as a qualified senior associate. But if you compare the long term, if you left a senior associate and you worked in industry for 2 years, you'll probably be on a similar wage than someone that stayed to manager and then left at that point anyway. It's not going to be a real incremental difference between the two in the long run. So in terms of hints and tips to maximize your exit opportunities, I will be releasing a series of videos on kind of specific roles. So how to break into consulting, how to break into corporate finance, how to break into investment banking. So look out for those videos. There's a couple of general kind of hints and tips I can give you. So as soon as you qualify, your LinkedIn profile or your LinkedIn messages will be absolutely filled with recruiters trying to offer you a variety of newly qualified roles. Recruiters obviously earn a commission if they successfully place you in a role, and they typically specialize within industries, within corporate finance or within investment banking or within consulting. So leverage that as much as possible. They know the process, they know what employers are looking for, they know what you need to demonstrate. Do a quick search on LinkedIn or Google for a couple of recruiters. Make sure you're picking one that's specific to an industry you want to go in, and try and leverage as much knowledge from them as possible. Look for those opportunities to demonstrate the skill sets that the role you want to go into requires. If we take consultants, for example, consultants are all about obviously identifying weaknesses in processes and recommending and implementing solutions to those processes. And this is pretty similar to what auditors do as part of the controls work if there's a listed FTSE 100 company or a US listed client. As part of your audit procedures, you will be identifying weaknesses in controls, and you will be providing recommendations on how you can improve those controls. So you can really use that experience to demonstrate how you have that consulting mindset of identifying weaknesses that need to be addressed and recommendations for improving them. If you want to go into corporate finance or investment banking and you're currently in the audit or assurance department of a Big Four, you really want to be trying to put yourself on projects that involve, corporate restructuring or debt restructuring, mergers and acquisitions or refinancing, or even potentially initial public offerings. They do sound like quite extravagant projects, but if you do a bit of networking, maybe speak to your resourcing department and express an interest, they will typically put you on these projects. The key one is obviously networking, whether that's in person or kind of via LinkedIn. A really good method is actually just to find individuals that are working or currently working at an organization you want to join. Say, for example, Goldman Sachs. If you type in Goldman Sachs, it will show you a variety of people that are working there. And honestly, just drop people a message. You'll be surprised at how many people do respond, reply, and provide you with help. Obviously, be a bit patient, don't be too pushy. As we come out of obviously lockdown and COVID now, the variety of in-person events are picking back up. Make sure you're networking as much as possible, hearing out for various events that are going on, and try and establish connections. The final thing to say is if you decide that leaving the Big Four is for you, do make sure you're not burning any bridges. You never know when that network or those relationships do come in handy, so do try to leave them on good terms at least. I hope you found that video useful. Like I said before, I will be doing some specific videos on how to break into corporate finance, how to break into consulting, how to break into investment banking, so watch out for those. But if you have any questions or you want to share your own experience about leaving the Big Four, leave a comment below and I look forward to the discussion. But anyway, until next time.